All right, Daniel, great to see you.
Good to see you, Sam.
Okay, so we're talking today financial controls for nonprofits.
For sure. We've had a couple conversations recently with clients or potential clients about financial controls and what's best practice for nonprofits. I know a lot of times when you're working in a nonprofit, you're wearing a lot of hats, and sometimes that stands somewhat at odds with having good controls, but there's ways to facilitate having good financial controls and getting the work done. So just thought we might explore that some today.
What do you think the reason is? Is it because people start with not a lot of revenue and they're building it from the ground up? Or is it because of turnover? Or is it because of just not real clear leadership at times? How would you define kind of the root cause, or maybe how people get into situations with the lack of financial controls?
A lot of times nonprofits start around a personality. You have someone who has a burden for the work, for the ministry, for the mission, and the organization builds up around them. And sometimes no one's taken a step back to revisit and say, okay, at the size that we are now, what controls make sense? Because if you have a founder of a ministry and they're the chief cook and bottle washer, then they're doing everything. So other than reviewing what they're doing, there's not a lot of other folks that you can put into the process to help, put financial controls in place. And so then as the organization grows, it just needs to be periodically revisited to see what's best practice for the size you are now.
I'd like to go about this two ways. First, I'd like to start for organizations, let's say they're 4, 5, 6, 7 million. They're a little bit bigger. And maybe where they should be or what would be best. And then the second piece of this, which I'll circle back on, is if people are going to start and they're lower. Let's say, like we've got clients that are well capitalized, a lot of energy, or maybe they're going to go from 100,000 to 600,000 in a year. So maybe if you don't think that's a dumb idea, let's start maybe for a bigger and more mature, because as we know with our clients, once people get like 8, 9, 10 million, a lot of the times they're going to go move to their own CFO, even though, we're talking to a client today that is, higher, somewhere between 10 and 20 million. We can do that, but it's got to make sense. So let's start for a more mature, bigger nonprofit. What should it look like? Or what are the most common problems that you see and how to structure this correctly?
So when you have a larger organization, you can more easily separate out the different roles and responsibilities of your finances. So, for instance, if one person is entering the transactions and someone else is approving the transactions, then you have what, accountants consider like the checks and balances, the segregation of duties, so that the person entering the transaction isn't the same person authorizing the transaction. The person that's printing the check isn't the same person who's signing the check. So in a larger organization, you have more seats that are available to help you put some of these controls in place. And it's similar in some ways with for-profit businesses. And the larger you get, the more, different departments and controls and things you have in place. The difference is just that with a small nonprofit, it's still not owned by a single person versus a small business, it's owned by one person. And if the owner of a small business has too much control, it's their business, it's their money. But with a small nonprofit, even if it's around a founder, it's not their money. It's the nonprofit serves, the public good, and it's a public, corporation. It's not owned by one person. And so that's why you still have to have controls with a small nonprofit the same way you would have controls with a larger nonprofit.
Can you talk through from an authorization standpoint, what does that normally look like?
I think about it in the roles of there's different areas of your nonprofit finances. You have the money coming in side, your donation, your fundraising side, how money comes in. You have the accounts payable and the money going outside. And then within the money going outside, there's usually different areas that have different controls. You might have a credit card that you're spending and you have some controls over how people are authorized to use credit cards, or you have your payroll section and you have controls over who's authorized to add someone to the payroll or who's authorized to give a pay raise. So typically people are more, of course, you have a lot of focus on the money going out and who's authorized to to approve expenses. And a lot of times that starts for nonprofits with a budget that the board has approved, and that expenses within the budget are considered, pre-authorized. And then as you get more down to the detail level with an individual program manager or director might be authorized for certain types of expenses that are common with their program, but expenses maybe over a certain dollar amount or expenses that are unexpected might need to be approved by the executive director or even by the board treasurer.
What else have you heard? What else have you seen? What would be helpful to directors, or what would be helpful to board members in this space of, let's say, 4, 5, 6, 7 million from a financial control standpoint?
One control is probably better suited for larger organizations, I'll say, is something like a lot of banks offer a positive pay system. And what that means is when you write the check and you send out the check, at the same time, you upload a file to your bank that says, these are the checks that I wrote today. These are the checks that are authorized to clear our account. And then if someone alters that check, if someone intercepts it in the mail, if someone takes a picture of your check and prints a brand new check with using your account information, any variation from what you've pre-approved to the bank is not going to let clear your account. And so, I've had experience with an organization that someone stole the bank account number and printed a phony check and told a third party that they had done work for us and asked for this third party's assistance in cashing this check. So this poor lady, she thought she had a boyfriend, I guess, overseas who had done work for us, and took this check to the bank for her boyfriend, presented it at her bank thinking that it was a valid check on our account. But the check was not authorized by us, it wasn't a valid check, it was a fraudulent check. And so if you have positive pay on your account, it prevents those type of expenses from ever clearing your account. It gets stopped, at the beginning instead of having to go back and fight a fraud charge.
Anything else here for this size of organizations that would be helpful?
I mentioned already budgets. I think that boards need to use budgets as a tool. I know a lot of times people think of budgets as handcuffs versus something that's beneficial. But really, a budget is directing your money where you want it to go. And so when you're thinking through the year ahead and you can plan out the programs and the activities that you want, it's really a chance to make sure that your priorities are straight on the organization, and it can be used as a management tool then to track against the budget to hold people accountable to fundraising goals or to program cost and things like that, so that it's not only a financial control, but it's also a tool that you can use to manage the organization.
Well, none of this stuff is exactly all that exciting at times to talk through, but it's extremely important. And the better these things are in place and the better things operate on a day in or week in, week out basis, the more clarity people have and the better stewardship for the work that's being done. So now jump into smaller organizations. Let's say 1 million, under 1 million, 2 million, 3 million. What are your thoughts there in terms of financial controls?
I'm excited about tools like Bill.com is one that we've used for our clients. And I'm excited about the way that allows for documentation of approval of expenses. And you can route different types of invoices to different department leaders if you need to get different, the authorization from 2 or 3 different people in some cases where, the executive director, they may have final approval of expenses, but you might want that cleared by the program manager first, or even with a small organization to have someone else involved in the payables process so that it's not just the executive director writing all the checks, but to have a chance to have someone else putting in the invoice, encoding the invoice, and then getting the approval and sign off. And even small organizations, they typically have a board treasurer or a volunteer who's available for helping on the finance side. And so, you might have we have clients who will have a dollar amount, and anything over that dollar amount the executive director needs to get the board treasurer to sign off on as well. And Bill.com allows you to document both of those approvals before the bill gets paid.
Yeah, could you share? I mean, obviously we use Bill.com a lot. For people that aren't using tools to streamline things, what's the pain, or what are they essentially missing out on?
Well, sometimes with a smaller organization, a lot of the financial controls happen after the fact. And so the after the fact controls can still be good controls. It's just that if you're reconciling the bank, for instance, that's a good financial control. You're making sure that nothing's clearing the account that's not showing up in your financial reports. But if you're reconciling the bank at the end of the month, and sometimes we've found that clients are several months behind on those, then the control becomes less and less effective the further behind you are, the less attention you're paying, to those types of after the fact controls. And so the benefit of something like Bill.com is getting that approval on the front end and documenting the approval on the front end before the money ever goes out, so that you're not playing catch up afterwards saying, hey, now why did we spend $5,000 with this vendor? That seems totally unreasonable, and trying to play catch up to something that happened 2 or 3 months ago, and instead you're addressing it on the front end.
Are people ever concerned or scared about putting in technology like Bill.com into their systems?
We haven't had that concern yet, but I think one benefit, I guess another benefit, is the fact that the folks that are putting the invoices into Bill.com don't have signature control on the bank account. And so you're able to specifically authorize, certain users of the Bill.com to initiate the payments from the account, but you don't have to give that level of permission to the clerk that's putting in the invoices, for instance.
Anything here for smaller organizations?
I think on the donation and deposit side, I'll say a lot of nonprofits are moving more and more to online fundraising and online platforms, where the money that's coming in is going straight to the bank account, and there's no way that people are intercepting that. With money that is coming to the organization, maybe it's getting handed, volunteers handing a check to somebody when they're on site. There's always risk when you have, an envelope of cash, or you have a check that got handed to somebody in person, or that you're picking up from the post office box. So I think on the money coming inside, you also have to look at who has custody of those, and then who has authorization. Like, for instance, even just sending a donation receipt is a financial control. And so if you put a little thought into it on the front end, you can say, okay, the person that's opening the mailbox and preparing the deposit, taking those checks to the bank, is not the same person that's typing in those donations into our fundraising software and sending donation receipts. Because if you have the same person doing both of those, then they could potentially misplace a check, or a check, goes home with them, and they still send the donation receipt, and the donor's none the wiser, but the organization missed out on those funds. Versus if the donation receipt never gets sent because you have two different people involved in that process, then when the donor calls up and says, hey, I never got a donation receipt for this, then it becomes apparent that the money is missing, and it gives you a chance to track down what happened to it. So I think, again, it's one of those things with a small organization, it's somewhat of an after-the-fact type control, versus a large organization that might use like a lockbox service where the checks are going straight to a bank account and they're never touching it. And so, there are different levels of control that you can implement, but I think even smaller organizations, if they put a little thought into it, even with just two people involved in the process, you can come up with a system that allows for some good controls.
Well, and one thing I can share, two examples, one smaller, one bigger, but you get to see the different mindset of a director. And obviously, sometimes it costs a little bit of money to do it, but you can see people that are playing the long game, and they try to build the foundation right from the start. And so they might have pretty aggressive goals from a revenue and growth standpoint, but they're trying to get ahead of it. And so we see where people are trying to maybe clean up a little bit of a mess after they're already kind of far down the road. And that can still get done. That's no problem. But then you see people that really from ground level, they start to try to put these things in place because they want to have the right people handling that part of their organization. So they have good reporting and good processes in place. And then the second thing is you see even bigger organizations, 6, 7, 8 million, where they just want to focus on the mission and they want to focus on, the staff, the programs, the leadership, but all they need is just good data and good dashboards. And so you see that when things are clean, it makes me understand our purpose even more. Like our job is to give them that data, and our job is to be there to ask those questions and make those recommendations. But they're not really thinking about finance all day. They're thinking about doing the work, or they're thinking about fundraising, and then they're just trying to make sure that things are falling in line with the budget. And so it's been interesting to notice the different stages of the journey that people get interested about this. Or honestly, sometimes you talk to people and they're in a bad situation, but you could have seen what they could have done a year or 2 or 3 or 4 down behind to not be in this situation today. And either way, it's solvable. It's just people are different, and some people are ahead of it and some aren't.
Certainly, I think it just takes a little bit of thought, and sometimes you're so focused on the day-to-day work, it requires hitting pause and stepping back and looking at the big picture to put some of those things in place. There really is a foundation for growth and supports the success in the long run.
Well, thank you. And thank you to everybody that listens to this. Hopefully this is helpful if you want to understand how to structure what you're doing, or maybe how to solve things where there's gaps today. Happy New Year. This is our first one after the start of 2025. Daniel, you got anything else as we close out?
This is a topic that I've thought about off and on for a long time, so certainly happy to talk to people about it. If you want some advice or insight into your situation, please reach out.
Sounds great. CFOleverage.com. Thanks so much.
Hey everyone, this is your co-host, Daniel Weaver, and I'm the managing partner with CFO Leverage. Thank you for listening to another episode of the Maximize Your Impact podcast by CFO Leverage. If you've enjoyed this episode, would you share this with a friend or leave us a review on your podcast platform? If you have questions about what you've heard or want help creating a solid administrative and financial foundation at your nonprofit, we want to hear from you. Please contact Sam Coates or myself on our website, www.cfoleverage.com. That's www.cfoleverage.com. Have a great day and go maximize your impact.